Ladies and gentlemen, I personally think the markets are going to rally tomorrow, and SoFi stock is, as you know, a part of the market, so it would not surprise me to see a decent sized rally tomorrow. And it comes down to the CPI data that is also released tomorrow. Why am I saying this? A lot of people are expecting to get a very negative response from the markets around this CPI data catalyst that is tomorrow, but I am here to give you guys a different opinion. I am not necessarily in that camp of we're gonna have a really red day tomorrow. Actually, the biggest catalyst for the markets are going to be bank earnings as well as retail sales. Bank earnings start on Wednesday and then retail sales come out on Thursday. We're going to dive into all of this as well as what is happening to SoFi stock today. So stay tuned. Let's make some money. Let's get to it. You guys already know the deal. It's time for a SoFi stock update. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Help get this channel to 1,000 subscribers and continue to make these videos possible. Thank you guys for tuning in, and let's get to it. So really, why I think the markets are going to rally, it's pretty simple, but you have to understand the concept here. So the markets are forward looking, so they try to price things in. Well, the CPI data is expected to come in very, very high, around 0.5% month over month inflation, and then about 8.3% year over year inflation from March of 2021 to March of 2022. Those are very high numbers, and the markets are expecting those numbers. So what will likely happen with the CPI is it comes out at expectations. If it comes in higher than expectations, and by higher I mean like dramatically higher, like 0.7% instead of 0.5% month over month, the markets would freak out. The markets would drop dramatically. Now, if you're actually thinking about what's in the CPI report, energy and food commodities, those are going to be the things that really weigh on the markets. But used auto sales, used auto prices have come down quite dramatically. A couple other things are starting to reflect to the downside, but those energy prices, they have came down a little bit, but for a majority of the March reading, they're going to be pretty high, but it's averaged out. So these, call it data points, are taken 3 times throughout the month. So it's not just one data point that is taken in 1 month. It's actually 3 different data points, beginning, middle, and end of the month. So in my opinion, a lot of this inflation worry, a lot of this expected high inflation reading is already priced into the markets. And why specifically am I even saying this right now? Well, because today the S&P is down 1.31%, Nasdaq down almost 2%, and the Dow is down almost 1%. VIX is up 12.5%. So you're seeing this severe red in the markets today, which goes to show me that the CPI reading is likely priced into the markets, and that's what is very important. If the CPI rating comes out at 0.5% month over month, which it is likely to come out as that, then you're going to see a probable cause for a rally, or at the very least, it's going to be a pretty neutral day in the markets. I really wouldn't expect a huge drop based off of that. Anything is possible here, but that's really my expectations as far as that is concerned. Now, let's go ahead and talk about the other big catalysts for the week. And really the big catalysts are going to be the bank earnings, and those bank earnings start to come out on Wednesday. You can see pre-market JP Morgan Chase, BlackRock, and First Republic Bank. Those are going to be like the precursor to all of the other banks that come out. The other banks come out Thursday pre-market. Wells Fargo, Goldman Sachs, Citi, Morgan Stanley, and PNC Bank, as well as Ally Bank, also come out Thursday pre-market. Now, why are the bank earnings going to be so important for investors, and why are they going to pay attention to those so much? Well, the main focus of investors is how is the consumer doing? How are earnings numbers going to come in at a lot of the major companies that obviously affect the stock market? Well, the bank's going to give us a lot of clues to how the consumer is doing. If consumers are slowing down spending, if their saving rates are decreasing, what's going on? Are they getting more loans? We're going to get a lot of clarification from the banks on exactly how the consumers are doing, and the consumer is directly going to give the markets obviously a glimpse into, are we going to see a recession later on into this year, or possibly 2023. And that's what the markets are going to care about the most, even more so than CPI data, because after all, the markets know to expect high inflation. They don't know really what to expect as far as a recession is concerned. The 2 and 10-year bonds did invert. The 5 and 30-year bonds did invert. Now they're not inverted anymore, but still, how close are we to seeing a recession? That's what the markets are really going to pay attention to. And the other data point that we have here does come out on Thursday, and that is going to be retail sales, and that comes out at 8:30 in the morning. And that's going to be another big one along the lines of seeing a recession. If retail sales slow down, not going to be a good thing for the markets. Now let's talk about specifically what SoFi stock is doing for the day, and SoFi is down about 1.5% at these lower end levels. So I do think, if anything, we have a higher probability of seeing a bounce tomorrow based off of the markets expecting high inflation. Likely we'll get high inflation, but not too high. That's the thing. What are the markets expecting? High inflation. But to see the markets drop and be surprised about inflation, it has to come in even higher than those already high expectations. If it comes in at expectations, the markets might take a chill pill and they might realize, hey, it's not as bad as we thought. The consumer, if the consumer is good, markets will rally, likely hit close to all-time highs, right? If the consumer is bad, we're breaking back down to 420 on the SPY. Shit's gonna hit the fan in SoFi as well as a lot of other stocks. But by and large, the lower SoFi goes, the less risky it is to actually buy the stock for the long term, whether it gets bought out or whether the business just keeps growing, at the rate it has been. It's looking pretty damn attractive here at $7.76 per share. As far as the Ortex data, you're looking at about 18% short interest of free float, cost to borrow max of 4.72%, current shares that are sold short 129.26 million, utilization of 100%, as well as a days to cover at 2.88. So looking prime for a short squeeze if we do see the market sentiment turn around. Whether you see inflation tick down or the Fed changes their course, something along those lines, you will see a big rally in SoFi stock. And you have to think to yourself, the stock is at $7.74 per share. How low do I think it could possibly go? And you have to ask yourself this question. And if I were to ask myself this question, like $5 is like inconceivable for the kind of value that SoFi is going to provide, whether it's a buyout target or, like I said, it just continues on its growth trajectory. It's almost guaranteed money, and nothing is guaranteed depending on your time frame. Typically, if you buy and hold stocks, you do very well, and if you're trying to day trade them, nothing is guaranteed. But at the valuation here, the total addressable market, what SoFi is doing, how diversified they are, if the stock falls to $5 per share, oh my God, it's going to get a little crazy out there. I'm going to go on a buy-in spree. It's going to be a little bit crazy. I have been buying more SoFi stock here, but we do have a lot of those catalysts throughout the rest of the week, and I want to see exactly what happens, but I definitely want to increase my exposure right here and right now. As far as the option flow data is concerned, 5 orders totaling $536.05 thousand. Positive order value of 26%, and last week you did see about 82 orders totaling $17 million, positive order value of 68%. Take a look at some of this call activity that is going on. July 15th, $9 call for $26,000. April 22nd, $8 call for $42,000. April 14th, $8 call for $71,000. April 22nd, $8 call for $26,000. There's obviously a lot of institutional option activity that has been going on, but the insiders have not been buying any more stock. Pretty interesting what has been happening with the board, directors leaving, the 3 of them, the insiders buying, and the downgrade to guidance we're seeing. It's definitely setting up for something very, very interesting, and I'm starting to get a little bit excited when SoFi is sitting at these prices. Now, as far as the max pain for this upcoming Friday, well, Thursday, because Friday the markets are not open, you can see the max pain is $9.50 per share. But as far as if we will get there, you really have to see a bullish reaction from the markets for CPI and a neutral, if not bullish, response from consumer sentiment, from the bank earnings, as far as what the consumer is doing, and the retail sales numbers. If that happens, you're definitely likely to approach that $9 level again, if not higher than that. Obviously, if some kind of buyout catalyst comes or just good news comes in general, it's going to be very, very interesting here. But $10 per share, that's the key level. you know, I didn't even think we'd be talking about this, but watch the $5 level if shit really does hit the fan and it gets bad. Watch to see if we drop to 5. I think it's very unlikely right now. SoFi is at a very attractive valuation, so I think you'll have a lot of valuation support under, you know, $7.50 per share where we're sitting at right now. I think overall it's going to be good. As we head into earnings, I think earnings are going to do well, and SoFi's already expected to do very bad on earnings. So if they can do better than what the market expects, which is already very bad, the markets don't expect a lot out of SoFi. If they can deliver, then the stock's going to do very, very well. It all comes down to market expectations. What are the markets expecting? What do the markets actually get? And then how do they respond from that? Overall, I think it's a lot less risky to buy SoFi stock at these prices than it has been ever in the history of SoFi. So that's basically going to be all. The MACD is bearish. The RSI is coming down to extreme oversold levels, and the stock market is bouncing just a little bit. SoFi stock has also bounced just a little bit throughout the day. So nonetheless, that is going to be all for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. And as always, subscribe to the channel, hit the like button if you guys want to stay up to date with all of this information. Be nimble with your trades, with your positions. I think there is more downside ahead for the markets over the course of this next year, but I think for tomorrow things are going to look pretty good. The markets are expecting a lot of bad news, and I think we're going to get bad news, but I don't think it's going to be as bad as the markets think it possibly could be. Keep that in mind. There's bad news, and then how bad could it possibly be? If you think, how bad could CPI possibly be? Like 0.8%? That's probably the key level where the markets would say, hey, wow, this is worse than we thought it was going to be. It's as bad as we thought it was going to be. We're going to sell it off. Expectations, 0.5% month over month. That's going to be the key. Make sure you guys watch that. Bank earnings and retail sales. So that's going to be all. Thank you guys for watching, and I will see you in the next